Welcome back to the UAE Stock Hub. In this quick update, we're covering a major development in the Dubai Residential REIT IPO. The offering has just been upsized due to massive demand. If you're invested or planning to be, you need to understand what this means. Don't forget to like, subscribe, and comment if you have questions. And as always, this is not financial advice. It's for educational purposes only. So what exactly happened? Dubai Holding has increased the size of the Dubai Residential REIT IPO from 12.5% to 15% of the total capital. That means the number of units offered has grown from 1.625 billion to 1.95 billion. This move comes after extremely high demand from institutional and retail investors. The price range remains the same AED 1.07 to AED 1.10, but the supply of units has officially increased. Most of the increase is going to institutions. The institutional tranche has been raised from 1.4625 billion to 1.7875 billion units. Meanwhile, the retail tranche, which is for people like you and me, stays unchanged at 162.5 million units. So while institutions get more room, retail allocations will remain tight, and oversubscription is still likely for smaller investors. But the question is, why did they upsize? The decision to expand the IPO reflects strong market confidence. Reports show the IPO was fully subscribed within minutes of launch. This kind of demand signals serious interest in Dubai's residential rental market and suggests investors, especially big ones, see long-term income potential and stability in this REIT structure. Now, you might be wondering if this affects the dividend yield. No, the dividend plan stays the same. The REIT still plans to distribute at least AED 1.1 billion in 2025. Since the total number of units increased, the dividend per unit slightly adjusts, but the yield stays nearly the same, around 7.9% if the price is AED 1.07 and 7.7% if the price is AED 1.10. So returns remain solid and attractive. What this means for you as an investor? For retail investors, this signals confidence but also competition. The fact that big institutions want more means post-listing demand could be high, possibly driving price momentum. However, with no change to the retail quota, it also means fewer chances for larger allocations unless you applied early and with higher amounts. So what would be the post-listing impacts? The upsized IPO may improve liquidity after listing. More units available in the market usually means smoother price discovery and tighter bid-ask spreads. It also helps attract more institutional investors in the secondary market, which often brings volume and long-term stability to the REIT's trading behavior. Here's the updated timeline. The IPO subscription closes on May 20th. The final offer price will be announced on May 21st. The REIT is expected to list on the DFM under the ticker DUBAIRESI on May 28th. Once it lists, you'll be able to buy or sell your units directly from your trading account. So is this a smart move or not? This upsizing is a positive sign. It validates demand, enhances post-listing liquidity, and confirms investor confidence. But remember, the fundamentals haven't changed. This is still a long-term income-focused investment. If you're looking for passive income from Dubai's real estate without owning physical property, this REIT continues to look strong. That wraps up this update. What do you think about the IPO expansion? Let me know in the comments. If this helped you, don't forget to like and subscribe to the UAE Stock Hub. More updates are on the way, especially once trading goes live. Until then, stay informed and stay invested.